Hello traders and welcome to another chart video of mine. So in today's video we will be talking about the head and shoulders and the inverse head and shoulders chart pattern. In today's video we will be talking about what is a head and shoulders pattern, how does it form, how can we trade it, and also how can we spot it. The reason why I want to do head and shoulders and inverse head and shoulders is because famous chartist Thomas Bulkowski, I've mentioned him a lot of times in my previous chart patterns video, has ranked the head and shoulders pattern as to be his #1 favorite chart pattern there is, meaning that he believes the highest probability of success across the chart patterns that he has studied has been the head and shoulders and the inverse head and shoulders. So going off of that, these high probable setups can be very beneficial, either as a continuation or also as a reversal. Here it looks like this is a reversal head and shoulders, but you can also see that what could also happen is you can see downward movement, and then you can see this head and shoulders form as a continuation of the bearish trend. So let's go into what exactly is a head and shoulders, and then we're going to talk about volume that you might see within that head and shoulders. So as I said, a head and shoulders can be a continuation or a reversal pattern, like this, as just a stopping point. And what you'll typically see is the left shoulder is made, then you get this line right here, the neckline, and then you see a higher high is made, and you might be able to see a channel if you connect some of these lines. And then you're going to see that channel broken with the right portion of the neckline. And an important note about the neckline is that this level will not always be equal to this level. You're not going to get a perfect level of support. What you typically see in the market is a slightly higher right neckline. And you might think, well, why is that? That's kind of weird. The reason why this happens is because the bulls anticipate this kind of pattern forming, so that when many orders stock up at around support levels, like let's say many orders are right here, what you're going to see is many savvier traders who are going to front run those orders and are going to put orders ahead of those levels so that their buy orders definitely get hit and these guys do not. And then they will get filled and the market will respond to that demand. So that's why you're going to see sometimes a heightening right neckline. And then you also might see a heightening right shoulder where these two lines might be parallel, sloping upward. But also this could absolutely also be a support line with this point being the same as this point. But you might see this as well. So volume trends. What you typically see with the volume trend within the head and shoulders is declining volume. So that means across the pattern, you're probably going to see volume fall. But what you will see with volume spikes is typically a spike on the left shoulder and typically also a spike on the head. This point, because it's the maxima point, as you can see here, should have high volume as it being overbought. And then also the left shoulder should have high volume so that it can turn the bullish velocity around down to here. And then the most important volume trend, besides the declining volume and the volume spikes of the left shoulder and the head, is you need to see strong breakout volume. For this head and shoulders to be valid, we need price to go down. Sometimes it retests, but sometimes it just goes straight down. You need to see high volume in the bearishness of this so that you can be confident you're going to hit your price objective. Okay, so we've talked about volume and we've talked about what exactly is a head and shoulders. So let's look at our first example on Ether. So what we can see here is we have the Ether 1 hour on Bitfinex. This is TradingView, a charting site that you can use, and we can label some levels here so that we can know we are dealing with a head and shoulders. So the first thing that we can see here is that the first part of this formation is that you first want to look at the context of the market before you get into the actual chart pattern. So the context of this market is we had a rising wedge, as it looks like, with very weak volume, as you can see, and not much rise. And then you have a very swift fall with very high volume, showing that the bears are probably in control, and this could be a head and shoulders continuation of the bearish trend. So keeping that in mind, we already know that the probability of the market going down is a bit higher because of the high volume and high momentum downward, which will likely continue. So then what we can do here is label the left and the right shoulders. And as you can see, this perfectly matches what we had here. with this part being a bit higher and this part being a bit higher, and I'll show you guys exactly where that is. So you can see here that that is our neckline. So let's just draw that right here. And you can also see that right here is the left shoulder connect to the right shoulder. And I kind of gave it away, but and then yeah, you can see that, and they're almost parallel. But this is what you want to see with the Head and Shoulders pattern. And if we analyze volume, we can see that there's a volume spike right here on a bearish engulfing candle. We can also see that there is a good deal of volume right here on our left shoulder and not much volume on our right shoulder, and in our movement from neckline to our right shoulder, which is good because we want to see that declining volume, as we can see here. And then we've identified a Head and Shoulders pattern, so what we need to do now is to wait for the breakout so we know it can be confirmed. And right there is our breakout. Perfect. We have a very high velocity, high momentum, and very high volume, two bearish candles that have really no tails, so we can call that also Merubazu. Merubazu candle is a candle that has no tails, just all body. So these are very strong, and also looking at the previous context, we can see that the market's very likely to go down quite further. So you might be asking yourself, well, okay, we found this pattern, but how do I know where to put my take profit or to put my buy order if I want to try to catch the rise? Typically, what you want to do with a Head and Shoulders pattern with our minimum price objective is you want to measure the distance from the neckline up to the distance of the head, the tip of the head with the tail. So what we're going to do with that is we are going to draw that right here. That's our neckline, the origin of our neckline point, and then this is our head. And we can see that that's around 43. Just keep one of these numbers in mind, that's all that matters. Probably this one. And then we can label that same thing, but downward. So what I mean by that is, if I was to extend this line a little bit further, we can see that the breakout of the trend line happened right here. So what I'm going to do for just my minimum price objective is to measure downward that same distance right there. So 43, and we'll see what that gets me. So our minimum price objective would have got us down to here, as you can see, but the market did drop a bit lower down to here, which would have been 65 just about. So we would have probably put our buy order or our take profit if we had shorted and wanted to cover the short around here. So that's just a minimum price target. That's not supposed to be the be-all end-all. It's probably better to set your own price targets based on ratios and Fibonacci's rather than standard price targets. But this is also an excellent way to just have an easy risk-reward trade because what you'd want to do with a Head and Shoulders if you're shorting it is to put your stop loss around middle of the pattern. The reason you don't want to put your stop loss too low is that typically you might see a retest where price goes down on high volume and then slowly goes up on bad volume, but goes up to retest that trend line. You don't want to get stopped out there, so you want to put it confidently in here. You also don't want to put your stop really high up here because if you see movement back into the pattern, then it's typically going to continue to go up. So cut your losses here. And yeah, so that's our Head and Shoulders pattern. Now let's go on to the opposite, which is called the inverse Head and Shoulders. So this is basically just a mere flip of our Head and Shoulders pattern. And this time what we see is typically you see a slightly higher left shoulder than you do right shoulder. And besides that, it's basically the same thing. Think about it just as a bullish instead of a bearish chart pattern. Again, these can be continuations or reversals. This could be a reversal, like let's say if we have a bear market, market goes down, creates this formation, and we are right here. And then we buy and we get a great breakout for the origin of a new uptrend. This could also just be a continuation where you see price go up, then come down, form this, and then continue to go up. Volume trends will basically be the same. You should see volume falling. You probably don't want to see volume rising with this pattern. The only place you'd want to see rising volume is around the breakout point. You wouldn't really want to see that at any bearish points. And yeah. So now let's look at what is a inverse Head and Shoulders, and we're going to use Bitcoin. So here we can see that this is a inverse Head and Shoulders, but unlike our previous example, that had a much higher retracement, as you can see from boom to boom to boom, around a 0.618, 50% or 0.618 retracement. This one really did not retrace much, maybe even just 23.6, if that. But that's okay. These, again, the inverse Head and Shoulders chart patterns are not perfect, and you really should not trade them, only if they're, like perfect patterns. You will see trends that should be true, but besides those basic tenets of what constitutes an inverse Head and Shoulders, you really should treat it the exact same. So what we see with the inverse Head and Shoulders is we see that slightly lower right shoulder. And we can actually see that here as well. So if I'm going to label this, you might want to pause the video and just label this in your mind first. Okay, so this is looks like the shoulders right here, left shoulder. I'm going to draw that to the right shoulder right here. And we can see that we have that great downward sloping trend line that we want to see. We can also draw it up here with our neckline. I just gave it away, but yeah, we're going to draw that here. You can use tails, or you can not use tails. And that's a common question. Do you want to use tails or not tails with trend lines? Typically, my answer to that is whatever fits the market or fits other trend lines better is probably going to be the one that's more respected. So if we were to choose between that one and this one, I like this one a bit better. Okay, so that would be our neckline. And we can see with volume that we had a volume spike right here, very high volume at our head, which is exactly what we want to see. We want to see the highest volume on the head, and also on this one, it would be on the right shoulder. Head and Shoulders, you'd want to see a spike on the head and the left shoulder. But again, this is just the opposite. So think about it as a mirror. And then the same thing that we're going to do is just do a quick measurement to find our price target. We can see that we have a 584. And don't be alarmed, this is minus. This doesn't matter, because you can either draw it this way to this way or this way to this way. It does not matter. This market is going to go up, so that'd be actually 584 upward. Now we're going to draw that from here and see if we can hit that. And unfortunately, the minimum price target would not have been reached. As you can see, 584 is right here. But it almost would have been reached right here with about, I'd say like a few percent margin of error. So it undercut the minimum price target. But you can see that these are just about equal. The distance from here to here is just about equal from the distance to here to tail. So that's going to be our inverse Head and Shoulders, and this is what they look like. Okay, so that's going to be it for this video. We've gone over Head and Shoulders and inverse Head and Shoulders. Just some quick things to remember before I end this video is that A, you want to see high volume with a Head and Shoulders pattern. I'm going to go back to that. With a Head and Shoulders pattern, you want to see very high volume at the head and the left shoulder. And you want to see not too much volume around here until you get the breakout, where you want to see a lot of volume. Same goes with the inverse Head and Shoulders. You don't really want to see a bunch of volume here. You want to see a bunch of volume here and here, and then you will see a bunch of bullish volume with the breakout. As you can see right here, this one had fantastic bullish volume on that breakout. This candle right here, right? These two. Okay. What you also want to see is the minimum price objective. You need to calculate that before you enter the market, and you should also put your stop loss around the midpoint of the pattern there, or the midpoint here would be much lower, but around here. And yeah, these are fantastic patterns to trade. They're not the most common. I would even say that they're maybe even the least common of the 4 chart patterns that I've shown in this playlist, but they are the most probable. So keep that in mind. Last thing, you should see a rising neckline on a Head and Shoulders and a rising shoulder line, and you should see a falling shoulder line and a falling neckline with the inverse Head and Shoulders, the bullish case. These can also be equal, and these can also be equal, and you should give some variance to these patterns because, again, these won't be perfect. But as long as you understand how these form and the psychology behind them and where orders are put, then you can understand the entire Head and Shoulders and inverse Head and Shoulders and trade them profitably. Okay, so that's going to be it. I hope you enjoyed this video and leave any comments below.